to Learn Wealthy, your go-to channel for real estate insights, market charts, and...
Hey everyone, it's James Santiago from Learn Wealthy. Picture this. You're browsing on Zillow, Redfin, maybe even the MLS. You're scrolling through home after home, and something stands out. You're seeing price cuts, like a lot of them. Homes that were sky high just a few months ago are now coming down in price. And you're wondering what's happening in the market. Well, let's break it all down and take a tour of the US real estate market and where it's headed and how you can stay ahead whether you're a buyer or a seller. Nationwide, the real estate market is cooling. The days of home selling in hours with bidding wars? Yeah, that's not where we are anymore. According to Redfin, around 30% of homes across the US have seen price reductions in just the last few months. What's driving this? One big factor. Mortgage rates is one, with a 30-year fixed rate hanging around 6.5 to 7%. It's taking a big bite out of what buyers can afford. But what does this actually mean in numbers? Well, the average home price in the US is sitting at about $420,000. You might think that's not bad, but here's the catch. It really depends on where you are and how much are people's wages and incomes. In places like San Francisco and Seattle, homes are taking some serious price cuts, sometimes as much as 10 to 15%. It's a bit of a reality check for sellers who got used to the pandemic-fueled frenzy. Now let's talk about how long homes are sitting on the market. Gone are the days of selling in a weekend. Right now, homes are taking at an average of 50 days to sell, up from 30 days just a few months ago. Why? It's all about inventory. According to the MLS, we've got 3.7 months of inventory nationally. And that is giving buyers something they haven't had in a while. It's funny how quickly things change. Remember, when we had less than 2 months of inventory during the pandemic, buyers are outbidding each other. I felt like a rock star. I was still in California at that time. I was selling my listings way over listing price. But now I sort of feel bad for my sellers. They either have to lower their prices or accept their house will not sell. See, the real estate market can make a real estate agent look good, or it can also work against the real estate agent. But at the end of the day, the biggest factor in selling a house is the price of a home worth its value. And will the buyers see that and have the ability to purchase that? At the end of the day, that's what sells the home. So what does this all mean for you? Whether you're a buyer or a seller, let's start with buyers. If you're in the market, that's some good news. You've got more homes to choose from, and sellers are starting to negotiate again. The bad news for buyers, those 7% mortgage rates are making monthly payments a lot higher. And if you adjust the home prices against inflation, they're also at an all-time high. It's like looking at a dream house and then realizing you can only afford half of it, or only in your dreams. For the sellers, this is where things get interesting. We're seeing homes sit longer, and if you're pricing too high, you're going to have to cut. There's no way around it. The market isn't as forgiving as it was. And we're hearing stories of sellers dropping prices by tens of thousands just to get offers. And that's why we're in a situation called the nothing market. Learn about it in this last video that I made. So they always say that real estate is a hyper-local asset. That means whatever is happening in aggregate total as a nation, it doesn't mean that's what's always happening in certain areas like Houston or San Francisco or New York. There's always sub-markets that appears to be in a totally different market. So let's take a trip across the country to see how this is playing out in some of the biggest markets. San Francisco, this one's tough. Inventory is piling up and homes are taking longer to sell, especially those $1 million condos. Some are cutting prices by 15% just to get buyers in the door. Austin, after being the hottest market for the last couple of years, Austin's cooling off. Price cuts are common and inventory is building. If you're a buyer, this is your moment. Or at least maybe the beginning of your moment. Miami and Tampa, Florida's been booming, but the insurance situation there, after the recent couple of back-to-back hurricanes, has buyers a little cautious. Still, prices are holding steady for now, but we'll have to keep an eye on this one. Indianapolis, the Midwest, is more stable. Indianapolis isn't seeing a huge price swings like the coast, but homes are still moving at a steady pace, making it one of the more balanced markets out there. So where do we go from here? Well, if mortgage rates stay high around 7%, we can expect to see more price reductions. And if the home prices against wages and inflation stay at an all-time high, then we can either expect rates to go low, people's income to go high, or house prices to start going down. I don't think people's wages will go up anytime soon. Maybe interest rates not even going down soon either, contrary to what people think and real estate agents and mortgage brokers tell you when the Fed cut rates. So I think what's likely to happen, instead of wages going up and instead of interest rates going down, I think home prices are going to continue to come down, and they are coming down already, especially in higher end markets like New York and LA. But don't panic, because the mainstream media is not predicting a major crash. Actually, never mind. This is the same narrative they had back in 2007. They had a soft landing narrative. They had the economy is booming narrative. Now, here's what the mainstream media is not talking about. The yield curve was saying the same thing, that we are headed for the recession. The Psalms rule was saying the same thing, that unemployment is about to spike. The Buffett indicator was saying the same thing. The stock market is at an all-time bubble. The Case-Shiller index adjusted inflation was saying the same thing. The real estate market is at an all-time bubble. The mainstream media was saying the same thing, that the economy is hot, that the market is booming. But then again, boom. 2008, 2009, 2010, 11, 12 happened. Several years of painful market crash. I'm not saying it's definitely going to crash in a few months. Also, I just want to remind you that the house market does not crash. Transactions are slow. So when the recession hit 2007, house prices didn't hit rock bottom till 2012. It's a slow grind down. But historically, data-wise, a recession and home prices going down further, it's definitely a higher probability than a soft landing. But then again, we're only playing with probabilities. And that's your US real estate market update. If you found this video helpful, make sure to hit that like button. It's really going to help me in my algorithm. And subscribe for more tips on finance, investing, real estate, and macroeconomics. Let's all learn wealthy together, and I'll see you in the next video.